All right, this video is going to cover one of the weekend reports. This is one that was issued for the week starting January 19th. It's very important to keep track of the dates. What I'll do is I'll go through the bottom line notes for both Bitcoin and risk on. That way, if folks want to just follow along by listening passively, they'll be able to do that. So this week here, first thing I described it as was a quagmire of unknown duration. I think you'll see as we go along why. Talk about our watch list and relative strength. Real rates, the market's outlook on credit, debt, bonds, and real rates a year out and shorter, dragging around the Mag 7, and then, of course, nothing's for free. That's always the case. So Bitcoin, bottom line. What we got here is we got up to the bottom line. We got up to that 96K zone, but now what? Did we already have a bearish reversal from there? We're already seeing the price trade down below 90 since then, so that may in fact be the case. I would look at a break below this 92.3K-ish as being significant. We got the 83 to 88 zone that is definitely in play. We're already below 90. We've got the 50-week above us and these other levels here. Even these, I wouldn't rule those out, 79.6 and 78.5. And then ultimately, look, we could be building a more bullish case, in my opinion. But I don't know if the back and forth is done yet or if we're completely out of this volume profile. In fact, we're already been kicked back down below into volume profile that we've become familiar with over the last several weeks. So that's what I would say for Bitcoin as a bottom line. Quick notes here. Risk on and off. Equal weighted SPOOs, small caps, and junk debt all looking bullish to me. I mean, that's the way I see it. Maybe I'm wrong. Perception of real rates a year out. The market's starting to adjust more. So now we're going to be heading into a Fed meeting where Russell 2000 has been showing a lot of bullish action, as has junk debt. We'll see how it looks when we get there. Bond vol has been low to now. So Powell's going to be talking to us now under those circumstances where rate cut odds are already adjusting, heading into that, which I think is going to be good that they're already adjusting now. And that's what he'll be dealing with there. So the two big things we've talked about for risk, and we're seeing them right here now. We saw them on the Tuesday distribution day, a fairly big distribution day, is rates and credit. Bond vol spiked. We are already seeing that. And then the behemoths. When you have stocks like Tesla, Amazon, Microsoft dropping 2, 3, 4%, it's very, very difficult mathematically for the indices as a whole to rise. And that can slip over into smaller stocks, perhaps stocks that we're looking at on the watch list or stocks that we own. I also referenced this 2019 analogy. The Fed was doing some mop-up duty. This was before we had the huge money printing fest with the COVID scam and all that. Before that, the Fed was doing mop-up duty. And if you look back and see, QQQ went nuts. 5 straight months it went up. So, look, bottom line is we don't know where we're going to go. We don't know what's going on in its entirety with, maybe a revaluation of the dollar, gold being revalued, the country's balance sheet. The Treasury Secretary Besson has indicated stuff like that may be in play. We don't really know. Bottom line is it doesn't matter. If the market's looking at this mop-up duty right now in a certain way, that's the way it is. Melt-up evolving. Yeah, I think we're really zeroing in on these core resources, things that people need to be competitive economically, and a lot of that has to do with energy, electricity, and power, and also to protect yourself. So I think that's common there. I also talk more about, and this is the real big one here. I think that the melt up, which arguably started last April, and I'm talking about a bigger, broader thing here, okay, has the melt up shifted and said, hey, okay, OpenAI, Oracle, who cares? And then become more discerning and more precise with how it's looking at things and what it is targeting. And are we seeing that already with small caps and some other things? I think that's a very, very big question. I don't know if it's definitive completely as of yet, but it looks like it could possibly be in motion. And then follow through. So again, this week, what I'm looking for, we had the big sell-off, we had the distribution on Tuesday, so we need to see the reaction to that, particularly for junk debt and small caps. But then, is there any follow-through? Can the market kind of absorb that and then advance forward, not just puttering along, but with some level of follow-through? I think that'll be important. And, as always, what we're looking for in bullish conditions, if the market's in a total meltdown, we're not doing any buying. We're waiting, we're watching, and we're looking for other options. But, what we're looking for, end of the day, is strong industry groups, stocks showing strong relative strength, in addition to other metrics such as accumulation, distribution, up, down volume, and 75% of stocks follow the overall market trend. That's the bottom line.